Hello, traders. Gary Wagner here. Approximately 12:12 in Honolulu, 5:12 in New York on Monday, 10th day of January 2022, and this is the daily report for gold and silver. Both gold and silver had respectable but modest increases in prices today, even with some moderate dollar strength. Gold basis the most active February 2022 contract is currently fixed up $3.90 at $1,801.30. We are maintaining our long position. We'll cover that in detail when we look at some technical studies. Silver also had a respectable gain today of approximately 0.4%, up 9 cents, with the most active March contract currently fixed at $22.50. And as I said, that occurred with dollar strength. The dollar up 0.2%, and the dollar index is currently fixed at 95.925. GLD, which is another trade we currently have on, is currently fixed at $168.25 per share, up 0.3% or 50 cents per share. This first chart is a daily candlestick chart of gold futures basis the most active February contract. As you can see, we are currently above 1800. 1801.30 is our price, and I am putting our first level of very, very tenuous support at 1800. We did go long last week at $1,787.60. Currently, our stop is fixed at 1772, and as I talked about yesterday, we have distinct prices that we are looking at to move our stop up to. We'll talk about that when I put up some moving averages. Right now, we have a couple of different levels of resistance. This one is based on this long trend line that we created from a series of lows months ago, and it still is providing us with insightful information. That is pretty much what the high was today, with gold trading to a high today of just 1802. But it is a second consecutive day in which we have seen higher lows and higher highs along with higher closes, and that to me is a very bullish factor for gold. Gold is operating with a double-edged sword as it pertains to inflation, and that's what the opening letter was about. Edges to the sword, though, I believe are extremely sharp, because the CPI data, which is going to be released by the government on Wednesday, is projected to show that the CPI could be as high as 7%. And the last time we hit those levels were in the early part of the 1980s. I believe 1983, we had about 6 or 7%. The other indicator that will come out is the core CPI. And the core CPI strips out food and energy costs. And of course, to me, that's very unrealistic because those are necessary staples of daily life around the world. People eat and they need energy to get them to and from work, whether they're driving their own vehicles or using some sort of public transportation, which is dependent, again, on energy. As you can see, we have changed the chart so that we are including the moving averages. We have them as dashed lines. The blue dashed line is the 100-day moving average. That comes in at 1793.70, and the 50-day moving average, which is above current pricing, at 1805.40. Where I'm looking to move our stop up to, I want a little bit more headwind to the upside before I feel comfortable doing this, because we want to account for a daily range, but that would be between 1793, and that, of course, is the 100-day moving average. In terms of resistance, we are very, very close to our first level, which is occurring at a kind of a crossroads, let's say. One, it intersects with this trend line that continues to move higher. It also is 1805.40, which represents the 50-day moving average. And then lastly, 1804.60 is the 61.8% fib retracement. And that is a short data set from the lows of November at 1758 up to these highs at $1,880. Traders, maintain your current long position in gold futures and Forex. Maintain your long position in GLD and current stops. We will be looking to move them up. I want to see how the market reacts on Wednesday when the actual inflationary numbers are published. This last chart that we are going to look at on today's show is a daily chart, but it is in Japanese average or Henkin Ashi format. We can see that today's candle is still a red candle. Realize that it is average base, so it will always lag behind real data. But as you can see, we are getting that pivotal candle, the typical kind of candle you want to see if a market has been in a decline, even though it's been a subtle decline, and then pivots to the upside. It typically occurs with some sort of very small candle, such as at these tops that occurred mid-November. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.